Thanks everybody for joining us. Dave Downs here with RASI, and I am with Brian Smith, our Director of Compliance. Brian, good afternoon. How are you today?
I'm doing very well. How are you doing, Dave?
I see you're still supporting those Colorado Rockies, which might be the worst team in baseball, but that's a great shirt nonetheless.
You know, though, their stadium has got to be one of the most beautiful stadiums in the country. So that's what I'm rooting for right here is the stadium.
You're cheering for Coors Field. I love it.
Yes,
Okay,
sir.
perfect. This month's compliance focus is really around year-end tax stuff and some things that may have changed over the last few years that if you don't know about, you should know about. I'm going to be the first to admit that I'm not a corporate tax specialist by any means, but I'm really excited to kind of learn a little bit more about that and to have Brian with us today to help teach a little bit on that too. Brian, thank you so much.
You bet.
Let's jump right in. Obviously, over the last year, a lot of businesses were really struggling to turn out a profit or even mitigate losses in a lot of ways. As it relates to being a taxpayer, what kinds of things can they take from a year like 2020 if they had a huge loss on their financial statements? What kind of benefits may be available for them?
Well, there was some legislation passed to help businesses in just this situation. NOL, or net operating loss carrybacks, were reinstated under the CARES Act. And I know the CARES Act was passed last year, but the impacts and benefits are still helping taxpayers. And there could be many taxpayers that are unaware of this change to the federal income taxes.
Smitty, I'm a restaurant guy, man. NOL carrybacks? Come on, help me out there. What does that mean?
Well, first, an NOL is a net operating loss, which occurs in a trade or business when deductions are greater than income and it essentially is a loss. And that net operating loss is used to reduce income in a previous tax year. Okay. So to say, to smooth out the taxable income. And NOL that occurred in 2018, 2019, or 2020 can now be carried back 5 years, and then any unused portion can be carried forward indefinitely until it is reduced to zero.
Holy cow. Okay, so that has major implications on prior tax years potentially, yeah?
Absolutely, absolutely.
Interesting. Okay. Why in the CARES Act? So that kind of all came about with the global pandemic of 2020. What kinds of things how can this really help benefit some of those restaurants and the taxpayers?
Well, first, the Tax Cuts and Jobs Act of 2017 repealed the net operating loss carryback. So this was wiped out a few years ago.
Got it.
And only allowed a taxpayer to carry forward that NOL indefinitely, of course, until it was reduced to zero. But when the carryback was repealed, taxpayers with a net operating loss were forced to wait until there's a profit in future years to realize that benefit from the net operating loss. But now a taxpayer can go back 5 years and offset taxable income with that NOL deduction, and that will help them that will help them recoup some of the taxes paid, and the taxpayer won't have to wait to the future when they have a profit to offset that. It's a more of a right now I can do something with this rather than have to wait, because this could really be beneficial to a business that does not expect to be profitable in the next few years, but was profitable in the past. And with this changes in the CARES Act, there was also a limitation put in place by the Tax Cuts and Jobs Act that was lifted under the CARES Act. The limitation that was lifted actually restricted that NOL deduction to 80% of taxable income.
Interesting. Okay, so I like to live in the land of examples again because I'm still a restaurant guy, and I like stories because I can understand those a little bit better. Can you give me an example of how an NOL was handled prior to the changes under the CARES Act, including some of the limitations that were lifted? This is what you're really referring to. Is there a story that you can give me or an example of that?
Of course, absolutely. That always helps me too to put an example to it. You know, so if the changes had not been made under the CARES Act and a business in 2020, let's say they had a net operating loss in 2020 of
Hmm.
$100,000. Well, there would be nothing for them to do. The loss would simply be carried forward to 2021 and beyond and reduce taxable income in the future. So if in 2021 let's say there was $100,000 taxable income in 2021, I had a $100,000 loss in 2020. Under the current rules, the taxable income in 2021 could only be reduced by $80,000. We could only use $80,000 of that $100,000 loss because of that 80% taxable income limitation. So then after that, in 2021, that taxpayer would still have a $20,000 taxable income, even though they had enough net operating loss in the prior year to offset 100% of their income. They're still going to have that $20,000 taxable income because their
Interesting. Yeah.
NOL deduction was limited to $80,000 or 80%, right? So let's step forward and jump into an example with these changes. So that same business had a $100,000 loss in 2020. Now in 2020, I don't have to wait for future years. I can carry that back, and I can go back 5 years. So in this example, let's say the taxable income in 2015 was $100,000. So that NOL carryback would reduce the taxable income in our carryback year of 2015, would reduce our taxable income to zero. The tax return for 2015 would be recalculated, and any tax that was overpaid according to the new calculations would be refunded to the taxpayer. And
Wow.
you can see how they realize that benefit immediately when they're filing their 2020 taxes
Hmm.
and don't have to wait to the next year to reduce taxable income.
Really interesting. So, kind of, yeah, it's not often you get to go back and make corrections on prior year stuff and be able to take that as a benefit. That's huge. My wife would probably say this to a fault, devil's advocate, but really just looking at the other side of the coin, would there ever be any situations where somebody would not want to apply these NOL carryback provisions as outlined under the CARES Act?
With taxes, there's always exceptions to the rules. So,
Sure.
yeah, there are some things that a taxpayer would want to look into and avoid, perhaps, because when an NOL is carried back, the taxable income and everything associated, tax credits, owners' IRA deductions, for
Mhm.
example, those are all recalculated. And it could create a situation that a taxpayer wants to avoid, like losing a big credit that they had already calculated, or perhaps it would create an alternative minimum tax liability in the carryback year. And we won't get into the alternative minimum tax, but essentially it could end up that alternative minimum tax could end up reducing the amount of refund that the taxpayer realized from that NOL deduction carry back to 2015. So, not in every situation
Sure.
will a taxpayer want to do this, but it's definitely a good option for many.
Sounds like next month's podcast is going to be on alternative minimum tax. I think that's what I heard you say in there. AMT. We need another acronym, right?
AMT, that is what it is. Yes.
Perfect. My last question for you: what would you suggest for someone who is unaware of these changes and how and they may really have a benefit for them for taking advantage of some of these things? How do they get a little bit more education? How do they learn more, and how can they potentially apply these in their situations?
Well, like I said, each business will have a unique tax situation in which the NOL would interact, impact, or change. So, my advice would be to please seek advice from your tax preparer because they're the ones that would know how these changes would impact your taxes and the unique situation, of course, the unique tax situation that every taxpayer possesses. So, my recommendation, reach out to your year-end tax preparer, and that could be RASI.
Brian Smith, Director of Compliance at RASI, and certainly extremely knowledgeable. We were focusing mostly on year-end kind of tax prep stuff, which we don't often talk about in the month of June. So I appreciate your time, Brian Smith. Thanks so much.
You are very welcome. Take care.
Have an awesome afternoon.